Well, good morning, everyone. Welcome to our Tuesday morning trading session. Hold on just one second here while I get you my monitor. Looks like yesterday was a little bit of a roller coaster. The market fell off sharply, but most of that looks like it came in the overnight. We might be seeing a duplicate of that today. The market just opened here, but if you scroll through the overnight session, the market just fell sharply almost since the London Open. It was a little bit of an uptick, but it's been in a nosedive ever since. So that's going to leave us with a rather large opening gap here. It'll be interesting to see whether or not the market can get into that gap. I suspect they'll give it a try anyways. But could be a lot of little seesaw action going on here. Out of the gate, you can see the NASDAQ very neutral at the moment. Got a lot of yellow bars in here. Working on a possible first micro-macro cross signal. We're not in sync on the macro trend line just yet. It could end up being a little bit of a choppy kind of day today. All right, so here we go. We're trying to press a little bit higher into the hard edge. We're just going to have to give them a little bit of time here to give us some structure. And there's the first micro-macro cross higher. So a big push higher. Now once we get through the top end of this trading range, which happens to be right here, we should see a little bit of a retest if in fact the buyers are serious about maintaining control. That first micro-macro cross, by the way, did hit its profit target. Okay, here comes that little bit of a retest that we're anticipating. And if they're serious about pressing higher, we should get some support here and a little bit more follow through. The Raptor also into the hard edge, maybe going to give us a cloud crossover signal. See how the cloud is starting to flip over. So look for that. Look for a chance here in the Raptor. And possible trend change signal here on the Falcon also. So a couple of things looking mildly bullish. All right, so here they come. We're going to get a signal here on the Falcon in a moment. Oh, come back here. Oh, sorry, folks. A little bit late on that, but that looks like it's going to have some follow through. And we also got a comparable signal here on the Raptor. So it looks like that buy is holding, and here they go. Trying to get into that opening gap. So we had the right idea. I was just a little bit slow pointing out too many things, not doing enough trading. But look at this retest that we had. That's practically textbook. So we get the breakout, here's the retest, there's the macro pullback signal, right on the line, and away they go. Just a tremendous move right out of the gate. And here on the Raptor too, it's obscured a little bit by this line here, which is marking the high of the day, but the cloud crossover, that little bit of a bounce out of the cloud, there's the signal. Just tremendous follow through on that trade. The Eagle is the only one that didn't really fire. We got this, we did get the test of the extreme down here, but we didn't know that until it happened in hindsight. You see, the signal actually developed right here. This wasn't really an Eagle signal that we could rely on. But you did get enough confirmation through your other tools as well, so it wasn't that much of a problem. Gold prices falling off sharply. Here's gold on the Eagle. So we had a nice little trend change here. We had a rule of 3 right here. Broke down, made a new low relative to these lows here. Came back, trend line changed. We had a green bar sell and very good progression out of that trade also. So gold kind of giving us the inverse look of what we're seeing going on in the NASDAQ at the moment. Crude oil fairly quiet. Not much going on with crude oil right now. Pretty sideways for the crude oil market. All right, we just had another macro pullback signal here. I think it's probably time that we shoot a trend line across the bottom here. And you can always carry a trend line over. If you have nothing to match on the other side of your trend line, in this case we do. And look at how nicely the market is following this little trend line channel. Should give us an early indication when things start to break down a little bit. So the bulls taking control here early. My goodness, what a rally that is. Can you see here how we're starting to get a little bit shallow? And now you see how we're starting to break down? Not that the market has to follow the trend lines exactly, but this is very often an indication of weakness. We're also starting to produce our third macro pullback signal, and we know there tends to be only 2 within a trend. So while I'm fully expecting a test of the extreme here, it does look as though the buyers are starting to lose their grip on the market at least a little bit. So here comes the red bar buy. It looks like we just hit our profit target there off of the red bar buy. Now we're getting our test of the highs. And we can also get ready to short the reversal or the failure of the red bar buy. So we have the red bar buy signal. We can also set up to sell it if in fact the market is retesting the extreme here. Now what I'm going to do is, we've only got 1 in there. Yeah, okay, I'll leave it like that. I'm trying to get 2 contracts in play here so I can leave one on as a runner. But what I'll do is I'll cancel my profit objective and we'll see whether or not we can't sneak a few more dollars here to the downside. Okay, so here are the highs currently. Let's see if they get rejected off of those highs. Now, by the way, we did have the first micro macro cross signal here. I would suggest you risk it fairly low, but in case you get some heat, which you did, but it does look like we hit that profit target. And now look at the size of these bars that we're getting. We're getting a lot more selling, a lot more action on these highs. We'll see what comes of it anyway. Like I said, you can just kind of park this order below your red bar in case the market does fall apart, which right now it does not appear to be doing. What I'm going to do is I'm just going to activate that order. I'll try not to forget about it. Oh, there they go. They're just taking off with it. All right, so we're going to cancel that. We're going to clean this chart up a little bit. Wow, the buyer's just really, really pressing hard or trying to press hard. And here we go with another macro pullback signal. Same problem as before though. We might be starting to run out of a little bit of steam. And don't forget the dominant trend, the overall trend, in spite of what's happened here the first 15 minutes of the morning, the overall trend is still down. So we need to remember that the sellers are likely to show up here somewhere. All right, we're just going to leave that alone for right now. Oh, we did get a 4-arrow consolidation going on here in the Hawk, as well as a very nice trend line touch here on the Falcon. Let's take a look at the Falcon here for a moment. And you can see we're right into our primary resistance line. Did we bounce off the primary support? Yes, we did. So we've moved 2 full zones on our support and resistance suite. Okay, you can see how the momentum is starting to fade. Well, you can't see it so much around the eagle. Really strong move there, equally strong move here. But on the other tools, you can kind of see how we're starting to move a little bit more sideways now. We've had strong move here, a little bit of a consolidation, another strong move, but you can see we're starting to consolidate or hints of consolidation. The Geiger counter is just chewing through those buy orders again. Mo asks, he says, Eric, when I see a red bar buy, those seem like a pretty good long signal. They tend most times, Mo, to develop near the end of a trend. I'll show you the red bar buy that is your best signal, and that's one that looks like this, where you haven't had a retest of this high. Remember, before the market reverses, we anticipate that it's going to retest the high and then fail. That's why we always anticipate before the market turns around. Now, in this case, we don't have this part yet. We're down here right now. So this red bar buy is a strong signal because we're looking at least for a retest of the high, and we got a lot of room here to make a profit. Had this market already had some a retest of the high, this red bar buy would be less reliable. Let me show you what I mean. Where is one? Oh. Well, that one's not quite right. Well, here's a green bar sell, which is the opposite of a red bar buy. And you can see we've got the same scenario. The market owes us a retest of the low before it can reverse. So you see you got at least enough to get your profit target out of there. And then the market starts floundering a little bit and ends up going higher from there. But I think you get the idea. If the market has, oh, well, here, let's pretend for a moment. We've already got a little bit of a retest. Let's say this bar came with a red bar buy. We've already had a retest of the highs. It's harder to say whether or not the market's going to reverse from there. I'll point it out to you when we actually see one like that again. Oh, this market is just a steamroller this morning. But if you get that that setup where it looks like you're owed a retest of the high, that makes for a good red bar buy. And you can see it came up here and it was looking like it was going to fail, right? It was looking like it was going to fail and turn over. At that time, you can look at selling the red bar buy signal. You can look at selling that failure if the market breaks down below there. In this case, it recovered and just kept on going. Okay, we're getting a little bit of selling coming in here now. We're getting another macro pullback. We're getting a red trend line here starting to build on the Falcon. We're into yellow bars and our cloud here on the Raptor. Okay, not to get too crazy about shorting just yet, but it does look like the sellers may have finally shown up. All right, we're actually getting a trend change signal. Oh, here we go. Here's a red bar buy, which is maybe not as strong a buy signal. See, because we've already had a little itty bitty test of the high. So even though it's a red bar buy, you can buy it. You know, we're scalping. It's a tight profit target. I might not go in with the full 4 contracts. There we go. But it is a scalping target, so it's usually easy to reach. And what you're always looking for from a red bar buy is not so much a trend continuation, but a retest of the highs. Wow. Crazy strong market this morning. Everybody who's trying to sell it is just getting hammered. Yeah, absolutely, Momo says, I like these red bar buys for scalps, like you say, another good indicator to watch for. And they are one of our high probability signals that we look for on the hawk. Wow, the buyers just refuse to give up the market. Okay, sellers becoming a little bit more active again. You see, we're first time in a while we've seen some yellow bars. Here are more yellow bars. These are all signs of weakness in the market. I'll redraw my trend line here on the eagle. Signs, you know, it's trying to break down. Maybe I'm not going to get too crazy about shorting anything here. Just kind of trying to use the trend lines as a little bit of a guide. You can see here with the eagle, we haven't had a retest of this high yet. Oh, it looks like we could be coming into scalp mode, or pardon me, trend mode here soon. Looks like the trade forecasts are a little bit behind the action today. Okay, so here's a first micro macro cross signal lower, also turning into a macro pullback, but the danger with this one is it's not that it's a poor signal, it's a good signal, but we'd have to risk it right above the high in order to make this work, because remember, we need to see that test of the extreme before we can anticipate that the market's going to turn over and head lower. Right now, all the momentum is up. Here we got a chance for a second one right here. I'll show you that one. And you can see where I need to go to find my profit objective. I nearly have to retrace to the lows here, which might not be such an easy thing for this market to do, given the insane strength we've seen here to the upside. Oh, and look at that. They slipped me a couple of ticks too. Scoundrels. All right. Well, they did give me my profit objective, but it is looking a little patchy through here right now. It's nice to see a little bit of volatility in the market, though. It does give us some opportunities. My goodness, this is quite the seesaw. All right, so we did get a trend change signal here on the Falcon, the macro pullback signal here on the Hawk. Not enough of a test of the extreme, in my opinion, but maybe they're not going to be able to pull it off. What I mean by that is I really like to see a retest of these highs before the market folds over. I find it hard to believe that that's all the retest we're able to do, even though that turned out to be a nice little soft edge sell signal. Wow, that's kind of crazy. Okay, it looks like the sellers have got control of the market here at the moment. We're working on another sell signal here. We've got the warning dot, and there's the signal right there. So I'm going to short below the low. All right. This is, still quite risky because we have not seen that retest of the high, right? So, oh no, I gotta go further back than that. Okay, what I want to do is I want to keep my stops as far out of harm's way as possible because I'm looking for that retest of the high. I'm looking for that test of the extreme. In fact, the best place for me to put them is right above the high here. Remember, your stop is only a loss once it's hit. If the market doesn't tag it, it's not a loss. All right, here come those buyers. Incredible ranges here this morning. Oh my gosh. Are the buyers really going to turn this around? That's crazy. See, the mistake I made here was instead of going with the counter trend signal, I totally blocked myself out of the with trend signal and that test of the extreme. And they're about to give me a spank here, I think. Yeah, we did come back with another first micro macro cross, another trend change signal here. Wow, what a crazy bar this is. What we've got going on here, just huge activity up and down this whole area right through here. Just a whole lot of fighting for control between the buyers and the sellers at this point. Okay, so we've had our retest of the highs. We'll see whether they turn over now. Okay, we're getting a bunch of soft edge sell signals here. I think what I would do is I would look to short it below the lows there. That's a little bit safer. It's just it gives us a little bit more structure to the trade. And there go the buyers. Okay, so we're going to cancel that. Ryman says the E-mini gap just got filled. As did the NASDAQ gap. So if we're looking at where the market's been in the overnight, we'll get rid of those lines for a sec. So if we take a look at where the market left off yesterday, at yesterday's close, it was somewhere right around here. And then we opened way down here. The market made a strong rally up. Filled that gap and just kept on going. Well, they're kind of floundering a little bit now, but yeah, just crazy strong right now. Ron's asking, why do you like the NASDAQ better than the S&P? Now, I would be happy to show you guys the S&P or any market you want, so just feel free to ask. The reason I like the NASDAQ better is I feel I get more bang for my buck. In other words, the NASDAQ is only $5 a tick. The E-mini is $12.50 a tick. That means most times I can take at least 2 or maybe 3 contracts for each E-mini contract. Okay, we're getting another red bar buy signal here that we can look at selling, and now we're getting into a first micro-macro cross. So this is looking like a probable short. What that means is that very often it's going to give me some trade management options that I won't get with the E-mini, pardon me. Like right now, it looks like if I get my act together and I short this, see, I can take 2 contracts here, but in the E-mini, I'd only be able to take 1. The problem, of course, with trading 1 contract is how do you manage it? You know, do I take profit on target? Do I try to run it out? What do I do? But you see here with the NASDAQ or the mini Dow also, because I can actually take 2 contracts, I have some management options. I can take some profit. I can try to let the other one run out. It adds some flexibility that I don't necessarily have in the E-mini. A lot of people trade the E-mini, well, not only because it's one of the world's largest markets, and it's very sexy to say, hey, I trade the E-mini S&P. But a lot of times dollar for dollar moves are the same. So whereas let's say you get a $200 move in the E-mini, you're likely to get a $200 move in the NASDAQ as well. So when you combine that with the fact that you can take an extra contract or 2, that makes a market like the NASDAQ very appealing. And you can see there's certainly no shortage of volatility here. So that's why I tend to favor the NASDAQ. But like I said, I'll be happy to pull up an E-mini chart for you if you'd like to see one. Here, in fact, why don't we do that? You're going to see the E-mini looks pretty much identical to the NASDAQ, but it's a little bit more expensive. And don't get me wrong, I'm not knocking the E-mini at all. It's still loading. For those of you who can't afford the E-mini and don't want to trade the NASDAQ, there's also the SPY on the ETFs that you can trade, which will tend to move in sync with the E-mini. Hooray! Oil's over $30 a barrel. Thanks, Tony. Tony said oil just broke 30 bucks a barrel. Wow. Okay, my E-mini chart's still loading, and like I said, I will show you the E-mini. Please, if you'd like to see it, don't hesitate to ask. And once it loads on my other chart, I'll actually drag it over here. Okay, more trend change signals. I would really, really like to see a retest of the highs here before we get too crazy about trying to short it. Come on, get up there just a little bit. Okay, so here's the E-mini on the Hawk, and here's the E-mini on the NASDAQ. Or pardon me, sorry, the E-mini on the Hawk and the NASDAQ on the Hawk. If anything, you can see the NASDAQ might even be a little bit more volatile than the E-mini. But we're looking for the same thing right now. We're looking for a retest of the highs. Had a nice little macro pullback signal here. Unfortunately, the yellow bars spoiled this one. But we got the same kind of rally going on out of the open. We had that first micro macro cross, 4 arrow consolidation / macro pullback signal. Another nice little macro pullback signal here. So we had plenty of opportunities on the hawk with the E-mini. And what I would be looking to do is I would be looking to short the failure of this red bar buy. See, now with the NASDAQ, I could cover it above the high, but I can't do it with the E-mini. Not at 2% of my capital anyway. Well, the NASDAQ's already drifted a little bit far, but this was the red bar buy that I was looking to do. And you see, I can do it. I can do it on the NASDAQ. It's just a little bit out of reach on the S&P, however. Okay, getting a 4 arrow consolidation there. If you are trading the S&P, you probably have to structure it something like that. Not getting a real big test of the extreme here right now, and that makes me a little bit nervous. I like to see a proper retest. I like to see the buyers really give it a push and then the sellers knock them down. Okay, so we've got some yellow bars through here. That's going to spoil all our buying attempts. But it does give us an option to short it if it falls apart from here. Okay, so they're trying, still not the best looking retest. All right, here they come. They're going to try to push it down. Now we're working on a first micro macro cross, so that kind of confirms what we're seeing here with the red bar buy, trying to short it. Now we do have the first micro macro cross signal. I'm still content to take it below this low. I don't see myself having to rush into this one. Especially since I haven't seen a retest of the high here. Okay, so now we're short. Now this is the E-mini. We've only got one contract in play, whereas in the NASDAQ I could have at least 2 in play. So what do we do? What do we do? Are we going to just take profit on target? The market's been very active this morning. Are we going to try to run it out? You know, these are the problems when you're trading a single contract, which is, again, I'm not knocking it. It's a great market, but that's one reason I prefer the NASDAQ to the S&P. So we've got our stops rolled to break even right now. The market's floundering a little bit. We should be able to hit our profit objective here. I suspect we're going to see them fall off just a little bit. There they go. Come on, give it to me. To answer the question though, what do you do? Do you take profit on target or do you let it run? If you're only able to afford single contracts, take your profit. Even if the market, falls off the map, like here's that same signal that we had now on the NASDAQ. This is the exact same signal we were just following on the S&P. So it's our first micro macro cross signal. I know you're looking at it and you're saying, oh, wait a minute, Eric, those trend lines didn't cross over. No, that's true. But you have to remember what the first micro macro cross shows you. It shows you a market that has gone out of sync and then comes back into sync. Most times the micro line and macro lines will cross when that happens, but not always. But our trend lines have gone out of sync. Our bars are out of sync, our filter is out of sync, and then everything comes back into sync. That's what makes that a first micro macro cross. I'd probably still take it below the low, but I could cover it above the high, and you can see I could get 2 contracts in here. Notice the risk amount was pretty much the same as what we were looking at on the E-mini. And that's because I'm controlling my risk by only risking 2% of my capital. So here I've taken profit on one, and I would also have a runner in play on the other one, which I probably would have been stopped out down here somewhere. I'm not sure I would have let it retreat that much. But whereas I made 125 on the E-mini, I likely made 150, maybe even 175 here on the NASDAQ, just by the simple fact that I could have an extra runner in play. All right, so there's just some of the benefits of trading the less expensive markets. A lot of people ignore them because they say, oh, $5 a tick. You can't make money on $5 a tick. Oh, yes, you can. You can make a lot of money on $5 a tick, actually. Okay, so that was a pretty good little short that we had. Not quite as much structure as what I was hoping to see, but it was still a pretty predictable signal for the most part. And now we're getting a little bit choppy again. Just snooping around here a little bit, looking for some opportunities. Sorry about that, and I hope I got to my mute button in time. I had to fight off a sneeze. Wow. Look at those buyers go. All right, crude kind of flip-flopping right now. Gold kind of flip-flopping as well, along here with the NASDAQ. Ryman's asking, on your E-mini screen, I'm using 4 ticks 2. What is your setting on the filter? Okay, that's a good point, Ryman. For 99% of the markets that you're trading, the default settings will work just fine. So that means a 6-tick hawk, an 8-tick falcon and raptor, and a 12-tick eagle. Just as an aside, some people prefer a 10-tick eagle. Those 2 ticks aren't going to make a huge difference in the signal generation. The E-mini S&P, unfortunately, is one of those markets that falls outside of that 99%, and it also happens to be one of the world's most popular markets. So for the E-mini S&P and a handful of other markets, we use the alternate settings, which is a 4-tick hawk, a 4-tick falcon, and a 6-tick eagle. So 446. And an easy way for you to remember that is the telephone prefix for Moose Jaw, Saskatchewan. A little bit of trivia for your next cocktail party. But yes, if you use the E-mini on the standard settings, it wouldn't look right. What would happen is your daybreak lines would be, like this. You just wouldn't get enough signals within each session. So for that reason, we go with the alternate settings, which is 446, which is what you saw when I pulled the E-mini chart over here. I had a 4-tick hawk, a 4-tick falcon, and a 6-tick eagle. Some of the other markets that I'll use that on is the grain markets, like soybeans. I'm also using it on gold. So if the chart doesn't look quite right to you with the default settings, feel free to put the alternate settings on there. Okay, excuse me just for a moment. I'll be right back. Okay, I'm back. What did I miss? No, it doesn't look like too much. It's going to be an odd day here today because the buyers have been exceptionally strong. The sellers also trying to fight the market back, resume that bigger downtrend. It's going to be interesting to see who actually keeps control at this point. Whether the sellers can continue to drive the market lower or whether the buyers are going to take it back and try to press it higher. Okay, so right now it's a full-on sellers press, and we've had a cloud crossover here on the Raptor, a nice little sell signal. Subsequent sell signal coming right here. Looks like we're going to see some follow through on that. Look at here on the Geiger counter how we've had this spike in the selling, and then boom, down they go. Hit the mat. I think we drifted all the way back here to the primary support line now on ours. Oh no, primary resistance, sorry. We got a little bit higher than I anticipated. Nice trend change signal here out of the Falcon. In fact, all the trend change signals this morning have been very reliable. This is a fun day to trade, folks. It doesn't get much better than this one. Yeah, like Jim says, nice volatility. Jim shooting us some advanced decline numbers. We got 900 on the buy, 1900 on the sell. So for the most part, it does still seem to be a seller's market. Okay, gold putting in a little bit of a rally, as we might expect. If the stock market is heading lower, gold's likely to head higher. Crude oil also dipping again, once more breaking that $30 a barrel range. Gold too trying to recover its previous downtrend. What I'd be looking for in, did I say gold or oil? What I'd be looking for in oil right now is a retest of the lows and a failure, and perhaps a move higher. So we're getting a green bar sell, kind of, sort of. Technically the band is already bullish, but just barely so. Haven't seen a real good test of the lows. I would look for crude oil to dip here somewhat and then perhaps find some support and start a rally. They do have some room to move here to get back down to 29.30. What's been really nice about today is the follow through on all the signals. When the market goes, it actually goes. It's got exceptional follow through today. The only downside on some of the signals is that they were unwinding a little bit quick, and I couldn't get to some of them in time. All right, so a little bit more seesaw activity. Nice move lower. Looking for a possible retrace into the hard edge here on the Eagle. We get a comparable hard edge bounce here on the Raptor. Possible first macro cross signal building here. It's not all in sync yet, so don't get too excited. And also a possible trend change signal brewing here on the Falcon. So it does look as though perhaps the buyers are coming back a little bit. Maybe. Good question here from Mo. Oh, way to go, Tony. Before we get to Mo's question, Tony is 7 for 7 today. Nicely done, Tony. He says, I'm switching to sim mode now. A good day for me. Way to go, Tony. That's great news. And you're getting some kudos here from the folks in the room. Okay, so Mo asks, this is a very good question. Eric, on days like today, would you be better to do just market orders and not miss out on the trades? You can do that, Mo. I've missed out on a lot of the trades because I'm, flipping between markets. If I was just full on trading today, I wouldn't have missed as many trades. But it's kind of a hazard of moderating a trading room that sometimes you end up missing something. And it looks as though maybe the buyers are not quite ready yet. Okay, Ryman's got a question here. I understand what trend and scalp means. Could you explain what swing means? And I think what Ryman's referring to here is the trade forecaster. Please correct me if I'm wrong. What the trade forecaster is looking at is it's looking at the market condition and trying to forecast what the next market condition will be, as well as what the current market condition is. So in this case, we're currently in trend mode and says we're going to be in trend mode for about the next hour. Now, because the market is in trend mode does not always mean that you're going to get a huge move. Very often you will, but trend mode normally means that the moves are going to be a little steadier and the pullbacks less violent. So if the trade forecaster is saying you're in trend mode, that's sometimes a good opportunity maybe to run a tighter stop because you're not expecting a violent pullback. Maybe you'll put a runner in to try to take advantage of a larger move. So those are the kinds of things that trend tells you. Scalp, which is the extreme opposite of trend, tells you the exact opposite. Scalp tells you the market is likely going to be more volatile. The pullbacks will be more extreme. The profit follow through is likely to be less. So in that case, you're probably going to run a deeper stop. You're probably going to go all in, all out on target because you're not expecting as much follow through. So the exact opposite of what you would do in trend mode. Scalp or swing mode falls somewhere in between. You're going to get pullbacks. They're not going to be as violent as what you're going to see in scalp mode, but they may be a little bit more pronounced. Profit targets, you're likely to at least hit your high probability target. Some of the trades are going to have a little bit more follow through. Some are just going to stop at the high probability target. So that's how the trade forecaster works. Right now, we're still in trend mode. We're supposed to be in trend mode for another hour, according to the trade forecaster. And again, that doesn't mean that we're just going to see, just a move like this. Much of this move actually came while trade forecaster was still in scalp mode, which is unusual, right? In scalp mode, we expect the market to look a little bit more like this. Bigger pullbacks, a little harder or a little shorter on the follow through, deeper pullbacks again. But now that we're in trend mode, we can anticipate maybe a little smoother follow through and not as much on the pullback side. Now, the trade forecaster works much the same way as a weatherman. You know, the meteorologists, they look at the current barometric pressure and wind speeds and humidity and cloud formations, and did I mention temperature already? Temperature. And they look at all these things, and then what they do is they look into history and they say, okay, last time we had this temperature and this barometric pressure and this much humidity and these kinds of clouds, this is what the weather was. And the trade forecaster works in much the same way. It looks back in the history of the chart and it says, okay, last time the market conditions were like this is the result. Now, fortunately, it is more accurate than your local weatherman, but it is still predictive, right? So anytime you're predicting something, there is a certain degree of error involved. You have to make certain allowances. One thing with the trade forecaster, Ryman, is make sure you have it set for the correct open time. So you go to your indicator window and you highlight your trade forecaster and make sure it's set to the market open time relative to your computer. See, I'm on the West Coast, so the market opens at 6:30 my time. Ryman was asking because he says he has his on the E-mini and it shows different than on the NQ. It could. Sometimes there's slight variations in it. Like I said, what it does is it looks back into the history of your chart. So the E-mini has been behaving a little bit differently than the NQ. And they don't always move lockstep together. Sometimes there is a little bit of difference between them. Bears still in total control here. Jim just updated the advanced decline numbers. We got 700 or just over 700 on the buy and under 2,200 on the sell. That's huge. Huge for the Bears. Yeah, Jim says a big fade off of the highs. And let's see here. He's probably watching the mini Dow. And, you know, it got a little choppy through here, but you got the cloud crossover. And whenever the cloud crosses over, we anticipate a little bit of a pullback into the cloud. And for the cloud, in this case, to offer some resistance. And then they came out with a sell signal right here, and down they go. All right, the buyer's trying to make a little bit of a comeback. Possible trend change here in the Falcon. I'm not going to get too crazy about buying it just yet, but I can see a retrace to the hard edge here being a very real possibility. Trying not to get too crazy here on reversing myself. All right, the Hawk showing us a first micro-macro cross higher. I would take it above the high. Ideally, I'd want to risk it below the low. What's happened here is we've taken out these highs. So we normally anticipate two moves in the direction of the breakout. If this drifts much further, then I'll take a look at getting a better entry. Come on, get up there. Get up there. Don't stall now. Looks like I should have had it on the hash mark, as they're coming up just a tick or two short of my break-even target. Oh, way to go, Jim. Jim took a long on the mini Dow, in at 65, out at 87 on 2 contracts. Nicely done. All right, so we would have hit our high probability target there before the market backed up and tagged me at break even, but that's all right. We should have another chance here. We did get a trend change signal here on the Falcon. And we also had a soft edge sell here on the Raptor, which is still working. The Raptor very early with that signal. All right, so now we'll see whether the buyers can muster another rally or whether the sellers are going to hold it down, working on a possible late filter entry signal here on the Falcon. For the most part, though, the buyers seem to have control of the marketplace today, until just recently, where the sellers have stepped up and become more aggressive. Okay, so we just spoiled our late filter entry signal. The trend line has changed color, and we're working on another with trend signal. So there is an opportunity to short here. The problem with this trade, if anybody's looking to follow a trade, this isn't the best trade to follow me on, because we may end up just getting a test of the extreme here, just a retest of the lows and then a bounce higher. So what you could actually do is you could look to do what we call the second push entry, in which case we would enter below this bar right here, because we currently know the limit of the bar. You know, we know the limit of the sellers at the moment. The buyers have shown up, and we know there's buyers right there. So if we trade below here, there's a very good chance we're going to trap these buyers and force them to exit. But like I say, the problem is the retest of the lows. We might be looking at a retest of the lows right now, and that's going to leave us in a little bit of a pickle. All right, so we'll see here in a moment whether they can pull it together. Jim's asking, does my Falcon have the equivolume bars on it? Yes, it does. The equivolume bars are these bars that change their width depending on the volume associated with that bar. So the wide bars have a lot of volume, the narrow bars have lesser volume. All right, so here's that struggle going on now. You can see we're trying to fight it down to the lows. Okay, now you see this bar right here with the one with the tall wick to it? That's a good one to roll my stop above, because what's happened now is the sellers have recommitted to the trend, and what I can do is I can recommit to the sellers also. We're only one tick above my break even, so, well, we hit the break even. I was going to force the trade to break even because that was close enough. We're about 3/4 of the way to the profit objective. If the buyers come back now and buy the market up, well, then I probably don't want to be there. I probably want to get out of that trade. All right, and we managed to hit our high probability target, and the market continues lower. Now that we've trapped these buyers out of here, these premature buyers, we're seeing the market continue lower still. So another great trade. Good question here from Tony. Tony asks, Eric, when the market is giving you so many opportunities to trade, do you trade more? I don't want to fall into the overtrading trap. It's been so long since the markets have had this kind of volatility. And that's true, Tony. You're going to find that about once or twice every quarter. So about once or twice every 3 months, you're going to get days like today where the market just has insane follow through. All the signals are good. It's the trading equivalent of shooting fish in a barrel. On days like this, I will trade a little bit more often. I think the most I ever traded on a day was 10 trades, and that was a lot. You know, for somebody who takes maybe 2 to 5 trades in a day, for me to take 10 trades was crazy. But most of those were in and out trades where I was scalping, and then I'd get another setup and I'd get in again, or I'd have a trend change signal like here on the Falcon. I'd get in, I'd grab it, and then it would come back with another signal, maybe a late filter entry or a trend line touch. And I just kept hitting my profit target. And it kept getting me in. But no, I try to be very selective. I'm okay with leaving opportunities behind. I know it's painful. Trading in hindsight is very easy. But when you're doing it real time, no, there's nothing like putting money in the bank. Because you are going to have days where the market's just totally uncooperative. And it comes with experience too, I guess. When you recognize that the market, hey, this is just one of those days, the market's behaving really well, and you know, I can have total confidence in my signal. But we've gone a long ways up, we've come a long ways down. There are also limits to what the market will do in a day. I know you watch crude oil a lot, Tony. Typically, crude oil will make $1,000 range in a day, 100 ticks. If you've already hit your 100 tick range, then things could get a little bit dicey. So, you know, just because the market is rallying doesn't mean it's going to fall off the map or go to the moon, whichever way it's going. There are limits even during the day that the market will do. But today has been exceptional. Fun to trade a day like today. Jim's watching the YM here. He says he's got a great big cloud to cloud on the Dow. He's looking for a possible reversal and a move higher. Before you get too crazy about reversing on a trade, remember you want to see a little itty-bitty test of the extreme. You want to see them at least try to force the market down here, and then the buyers take control. That's going to make it a little bit easier. Oh, Jim says he's trying to hold out for 60 or 70 ticks between the clouds and the hard edge. That's what he's looking for. It essentially shows you when the market is extremely overbought or oversold. Wow, the way they're going right now, though, it almost appears as though they're going to try to take it down to the low of the day. That's pretty crazy. A quick reminder that tomorrow, Wednesday, we're going to be meeting in the public trading room. So that's the alternate venue. I think we're going to shut things down here for the morning. If you are going to continue trading this afternoon, well, the big trend is down. Today's trend is ever so slightly up. The buyers still have just the slightest of edges. But right now, I think your best bet is to look for a selling opportunity. Could see a little bit of an uptick here. Like Jim says, we could be looking for a little bit of a burst to the upside. But I think you're going to be better, for the most part, staying to the short side. All right, you guys, we'll catch you again tomorrow morning. Bye for now.